Welcome back to the Finance Underground. We're shedding light on the secrets of finance. So today we're going to talk about what is a credit report and a credit score and why should I care. So credit reports basically is your grade on your ability and your willingness or your history to pay back loans. Dave Ramsey calls it the I Love Debt score. So it's a score of your debt history and your payback. So just like in school, you get a grade. If you turn things in on time, you do your work, and you do well on the tests, you get a good grade. Your credit score is the same way. You're going to get a score according to how you play by their rules. The FICO score, which is the Fair Isaac Corporation, has a score that's based 35% based on-time payment, 30% based on credit utilization, 15% based on credit history, 10% based on total credit lines, and 10% based on recent inquiries on your credit. So those are just to give you an idea of what the FICO is based off of. So a lot of that is on-time payment and credit utilization. What do you have available as credit, and what are you using, and how are you paying it back? Are you paying it back on time? You get a good score. Okay, there are three national credit reporting agencies. There are TransUnion, Equifax, and Experian. And those three credit reporting agencies calculate their own score, but they're typically very close to each other. You can pull a credit report for free at annualcreditreport.com. You'll see other places, but a lot of the times people are trying to grab your contact information or they're going to try to charge you a fee, but annualcreditreport.com is free. The other ways you can grab a credit report to kind of keep an eye on it is apps like LendingTree or Credit Karma or Credit Sesame. Some of those, if you sign up for an account with those, they give you access to your credit score. My credit union, when I log into my account, has my credit score as an option where I can look at that. So you can keep a track of your credit score pretty easily in today's world. It's a pretty good idea. If you don't have a credit union or a bank or an account that gives you your credit score, I would recommend going to Annual Credit Report and grabbing one of those. You can get one free report per year for each of the three different reporting agencies. You can pull them all at once a year, and compare them. That's one way to do it. I'd recommend probably going in every 4 months and pulling one, and then 4 months later pulling a different one, and 4 months later pulling a different one. Then you have every 4 months you can look at your credit. And the reason you'd want to keep an eye on your credit is just to make sure that it's accurate and make sure that somebody else isn't trying to get into your credit fraudulently. So while we're talking about credit scores and borrowing, I have to give you the fatherly advice: be extremely careful with debt. Okay, debt is risk. It's like walking out on the end of the teeter-totter. I don't know if you guys remember the teeter-totters. They probably banned them because they're not safe anymore. But in the good old days, there was a teeter-totter. And one friend would get on one side of the plank. There's a plank that went across an upright bar, and you could teeter-totter back and forth. Friend on one side, friend on the other. Well, if you got a couple of friends to hold this side down, you could walk out onto the other side and you could see further because you were up higher. That's debt. You're standing on the end of the teeter-totter, and as long as your friends stay on this side, everything's fine. But when those friends move, when the bell rings and everybody runs inside, right, at school, whatever it is that happens on that other end, if the weight comes off the other end, you fall. And that's what debt puts you at the end of that teeter-totter. You're at risk while you're borrowing. I'm not totally against debt. I think it can be used wisely, but use extreme caution. Okay. Basically, the only things that I approve borrowing would be a home, a car, and your education. But with that, be extremely cautious. Do not borrow the full amount that someone will lend you. That is way more than you need to borrow. Work your way through school, Borrow as little money as possible. Borrow money when you're going to starve, right? If it's starving while you're going to school, or lending or borrowing money, borrow money, but get through. But also make sure that you are running a true financial analysis against your education versus your debt. Do not go $300,000 in debt to get a degree that does not have a direct financial payout tied to it. $300,000 in debt to become a teacher is probably not a smart thing. Teachers don't make that much money. $300,000 in debt to become a doctor, that's probably worth it, right? They're going to make a little bit more money. A house. Be careful with the house that you purchase. You do not need the fanciest house in the fanciest neighborhood if you cannot afford it. Borrow conservatively 25% of your take-home pay or less for a 15-year mortgage. Do not borrow more than that. And a car, make sure that you are driving 4 or 5-year-old cars and that you're putting down a decent down payment so your payments are easily made, and try to borrow that for 36 months or less. Some guidelines on debt. If you pay those back on time, you pay your loans off, your credit score will go up. Pretty simple. If you are a good borrower, your credit score goes up. The ultimate goal is to have a 0 credit score because you stop borrowing money and you have lots of cash lying around. So let's work toward that, making piles of cash. So why should I care about my credit score and my credit report? Why does it matter? Well, your credit score, you're going to get lower interest rates when you borrow money. Your credit score is going to give you the ability to borrow money if you need to borrow. And it makes it easier to borrow, especially when you're getting a car or a house. It's a convenience thing. It's a score that's going to allow you to borrow more. Which, like I say, ultimately we want to make it so we have piles of cash and we don't borrow any money. That'd be ideal. Okay, so why do we care about the credit report? So the report is a detailed analysis of all your credit history. So it's good to pull those and look at the details of that to make sure that there's no fraud or that everything on there is accurate. If you have things on your credit report that are not accurate, you can actually contact the credit bureau and work with them to get things fixed so everything on your report is accurate. That way, when you do go to borrow money, you have a clean credit report and a higher credit score. So that's why we care about credit scores and credit reports. Your money's making somebody rich. Let's make sure that it's you.